Hi, I'm Charlene Chen. I'm the Chief Operating Officer of Bitpesa.
Welcome to the African Tech Roundup, Charlene.
Thank you.
Well, there are basically two types of people in the world, right? There are those who own Bitcoin and those that don't. Which one are you?
I absolutely own Bitcoin.
When do you expect we should expect for Bitcoin to mature, into a sort of mature asset class? At what point do you think that might happen, where Bitcoin is synonymous with, say, nickel?
That's a great question. Well, actually, the World Economic Forum just published a tipping point technologies report where they said that by 2027, so in roughly 10 years from now, Bitcoin blockchain technology will reach a tipping point. And what they cited is that about 10% of the world's GDP will be stored on blockchain technology. So it might be sooner than you'd think.
So for those who aren't as au fait with cryptocurrency and Bitcoin specifically, what is and using this as sort of a springboard to explain why Bitpesa exists and how it is you guys go about doing business. Explain the significance of cryptocurrency, perhaps Bitcoin specifically.
Sure. Well, I think why cryptocurrency is so exciting is because it's decentralized, peer-to-peer currency. So you're able to achieve a speed and a low cost for peer-to-peer transactions that currently with existing technologies isn't really possible. So think of Bitcoin or cryptocurrencies as sort of like a mobile money that can be stored on your phone and sent from person to person to business, business to person, etc. Without having to go through an intermediary like bank or, also it's not necessarily monitored or regulated by a central bank, which would be basically seeing everything that you're sending and controlling it and affecting the valuation of it. So where Bitpesa comes into this is we first started the company to significantly lower the cost of remittances. And we focused on the sub-Saharan market, namely because we were living there and had been working there for many years. But also we saw that there were the most inefficiencies in the payments market.
Relative to?
So for example, remittances to sub-Saharan Africa are 12% on average compared to the global average of 6%. So we're talking about double the fees. So that's how we initially started out. And really the cheapest way to do remittances would be, Bitcoin to Bitcoin or cryptocurrency to cryptocurrency wallet. But I think the challenge is that cryptocurrency, although it is getting increasingly accepted by more and more merchants, both online and at point of sale, it's still not mainstream enough so that, and I get paid in Bitcoin. So it's not like...
Wait, seriously?
Yes, I do get paid in Bitcoin. But, it's not as if I could necessarily take my Bitcoin and then go to a grocery store in Lagos and pay for my groceries. So Bitpesa really exists to kind of bring the low-cost nature and the efficiency of blockchain technology or cryptocurrency technology, but converting it in and out of a fiat currency like Naira or Ugandan shillings or Kenyan shillings that you can actually spend.
The world is currently surfing the mobile money trend, led by East Africa in many respects. Create a bridge, if you will, or framework of thinking about cryptocurrency in the context of a continent that seems ready to adopt innovation around, traditional currencies.
Mm-hmm. So the best way to explain what Bitcoin is or what the potential is or what cryptocurrency's potential is for the continent is to say that cryptocurrency could theoretically do for Africa as a continent what M-Pesa did for Kenya. So why was M-Pesa or why is M-Pesa so successful in Kenya? It's because it's got a tremendous market penetration. So everyone, from a young age to an elderly person has a phone that can support M-Pesa. All you need is really SMS and USSD. So in terms of market penetration, you've got that going for M-Pesa. But there's a great network effect beyond the fact that so many people have M-Pesa wallets, and that's the fact that you can use M-Pesa to buy pretty much anything in Nairobi. When I was living there for 5 years, I used M-Pesa all the time. And then also the idea of if you receive M-Pesa, then you can cash it out at one of thousands and thousands of agents across the country.
But I mean, in this context, you're receiving shillings, aren't you?
Yeah, but the beauty of what Bitpesa can do and has done for, the last 4 years since operation is basically take the Bitcoin out of the picture. So basically anyone in the world, an individual or now more so we're focused on businesses can send money to the countries where we operate. And we're just using Bitcoin as a token of settlement in the background. So sure, if you've got Bitcoin already in, one of dozens and dozens of countries where you can buy Bitcoin these days, then we can instantly convert it into African currency. So Kenyan shillings, Ugandan shillings, Tanzanian shillings, Nigerian naira, and soon SEFA.
So what sort of rates are you offering relative to incumbents?
So again, with the remittances, our goal was to be 75% cheaper than the market leaders, which are Western Union and MoneyGram. So when we launched the remittance product, we offered transaction fees of 3%, which is half of the global average of 6% and only a quarter of the 12% average of payments to Africa.
Are you secretly hoping that Bitcoin it doesn't go mainstream, because wouldn't that disrupt your business?
That's a great question. No, I mean, I think for us, it sounds funny to say, but it's always good if you can put your business out of business, and then you'll innovate into other areas. So eventually we hope that FX and sort of transaction fees will become a commodity, or FX will become a commodity, and therefore transaction fees will come down dramatically. But a lot of the stuff we're excited about is beyond instant payments. We're also partnering with a company called Bitbond, which is partnering with Jumia to basically issue credit to SMEs across Africa that are looking for credit to purchase goods from abroad, say China or Dubai, etc. So basically, Bitbond is doing the credit scoring. They send us Bitcoin and we instantly convert it into African currency. So we're kind of like the last mile distribution for dispersing even credit. So we moved beyond the remittances that we focused on initially to more interesting products.
So that's it. I mean, we're nowhere near that future, which some people have a hard time imagining, this totally electronic currency-led future. Where we are currently is, in fact, something that I feel is not spoken of enough. This reality that most of Africa, including East Africa, where M-Pesa is such a big deal, most of Africa still functions on cash. And what are some of the fundamental macroeconomic issues that drive the perpetuation of cash in these economies? And pick a key economy where Bitpesa operates and use that as an example, maybe.
Sure. I think that's a great point. Actually, you read my mind, is that cash is still king in many of the African countries where we work. I can think of the example of those of you listeners who are from Kenya may have heard of or know what I mean when I say boda boda, which is kind of the nickname or slang for a motorcycle or taxi, or a guy on a bike. And boda boda came a shorthand for border, because these motorcycle taxis are literally carrying cash across the border between Kenya and Uganda. And I think it's important to note that even neighboring countries have huge transaction fees. Like Kenya and Uganda, case in point, average transaction fee is 20 to 25%. So I think the issue is that as long as they're not or there are too few opportunities to cheaply send money between countries, people are going to rely on the old-fashioned way to get money across borders. I think there's also the challenge of capital controls, for sure. So when we think about some of the companies we work with, which are, say, Nigerian businesses importing goods from China, is it easier for them to go to their bank and try to buy $100,000 worth of US dollars, or go to the parallel market, buy some cash, stick it in a suitcase, and then fly to Guangzhou, and then actually buy the goods in person. So I think the challenge is there's not many options. And so, there's this tendency to kind of come back to what we know and trust and can feel, which is hard, cold cash.
In the context of Bitpesa being a startup, and startups typically playing to opportunities that are typically in murky waters. I mean, hence the appeal. If this was all clear cut in terms of information and data in a space, I mean, the opportunity wouldn't exist. All those things you hear all the time. What do you play to in terms of trying to attract the sort of investment you would need to keep going as a business? And maybe in the same breath, give us an indication of the sort of funding you guys have landed. You've done a Series A, right? And so what you sort of landed for Series A, and how much of the future you enthuse your investors on, but how much of the realities you have massage into that projection in order to make sure you're not, shooting yourself in the foot by taking on money you can't really, give a good return on investment on?
Well, I think one of the things you learn as a business raising money in Africa or outside of Africa for an African business is that you don't necessarily have the liberty of raising kind of the Silicon Valley numbers where, you've raised so much money and then you're struggling to show the return on investment.
That's really good. I like that. That's smooth. That's like, we only get just what we need.
No,
that must make your investors feel so good about the deal they got, right?
Exactly. We raise exactly what we need. In terms of public knowledge, it's publicly known we've raised about 5.7 million US dollars through our Series A, which closed in January.
What sort of runway does that buy a company like Bitpesa?
Oh, well, I'm not at exact liberty to say, but just to say, we've been in operation since end of 2013. I can't say too much about our burn rate, but just to say, we do try to stay lean.
Had to ask.
Of course. We stay lean. We've got a team of about 25 with offices in Nairobi, Lagos, Dakar, London, and Luxembourg. So back to the investors. I think a lot of our investors are really excited about the future, and they've never seen anyone doing blockchain technology to power payments. Well, some of them have, but particularly in frontier markets, including some of the ones we work with in sub-Saharan Africa. So I think we have the right kind of investors that are really forward thinking and aren't just excited about the markets we work in just fundamentally, but the ability of our team and the technologies we're using to disrupt what are really inefficient markets. So, at the same time, you don't necessarily want to lead by saying, we're, this Bitcoin company, because I think Bitcoin sometimes has a negative stigma. So, we often talk about ourselves as being blockchain powered, which you alluded to before. Is there is a big distinction, and blockchain technology right now is a very sexy topic.
Well, okay, so I want to get back to that point you're making in a moment, because it's an important distinction, and I want your opinion on the reasons why Bitcoin has got such a bad rap, and how that obviously influences your prospects as a startup, right? But I do want to pick up on something you said moments ago about how Silicon Valley startups, probably in your position, but servicing perhaps a more established or more affluent developed market, would not only not have any problem sort of attracting the kind of interest from investors you guys have if they had similar traction in their markets, but might even have run into the problem of like attracting too much. Why aren't we in the same position on the continent? I mean, I'm asking this really to get your sense of what are the differences in terms of that on the continent as a startup founder who's successfully landed cash.
Yeah, well, I must give credit really to our CEO Elizabeth Rosiello, who does lead our fundraising efforts. But yeah, I think the reason why you don't see more of this kind of run-ups of a lot of money going towards African startups in general, much less like a cryptocurrency powered startup, is just the perception of risk. So I think you kind of get what is perceived, and of course we all know like Africa is not one country, but many, many different markets, and each market is unique. I think the best investors we see in general, and I would claim that ours to be included, they either look closely at, or they know the market themselves. Either they've lived or worked there, or at least they've invested in companies and look closely at what works and what doesn't. So I think there's just not that many investors who know the African market that well, or the specific markets in which we work, much less like a Pan-African investor. So I think just in terms of that, there's just less investors that have that breadth and depth of knowledge. But yeah, in terms of the cryptocurrency, you're seeing a trend these days called ICOs, which is a play on the term IPOs, where you're seeing distributed ledger technology companies basically raising money through crowdfunding, but through the sale of digital tokens, as opposed to kind of raising money the old-fashioned way. So that has also been a way that we've seen. I don't think I've seen any company in Africa try the ICO, but
because it wouldn't work.
I'm not sure. I can't say for sure, but
because it wouldn't work.
Yeah.
I can say.
Okay.
You did the right thing. You went and got the money. That's fine. And that's probably because that's what would work for now. Again, I'm happy to be proved wrong. So if anyone listening out there is aware of a play that's worked.
Fair enough. I don't know that we'll be trying that, but I can't promise we'll never try.
I suppose here's the other, perhaps slightly more difficult question to answer, is why you had to look abroad for that money. Because I know for a fact there's enough to mop up in terms of loose money, loose, VC angel money. 5 million is not a lot of money, even in African terms, from an investment perspective. Why do you think it is that you had to go looking for it abroad? Or maybe it was available locally and the potential investor didn't fit your needs. But what is conspicuous is the fact that no local major names feature in your Series A. And I'm curious to know what sort of thinking goes into deciding who is a great fit for like Bitpesa, what local investors listening to the show ought to be thinking about in terms of if they're to attract the sort of portfolio investment that Bitpesa represents in this case.
And so the good news is we're starting to see more angel investing across the continent, which Tommy Davies will often talk about, heading up the Africa Angel Business Network. And you're seeing more incubators and sort of startup prizes and innovation funds sprouting across the continent, which can help an early stage startup get off the ground. And then you see a lot of like, the Helioses of the continent doing really, really big PE VC deals, but there's sort of this missing middle. If you're trying to raise, above $1 million, $5 million, even something less than $10 million, I think is in that sweet spot where it's just harder to find investors that are willing to take that kind of bet.
What are your needs in that Series A space that you think might be hard for a local investor to wrap their minds around typically?
I can't speak to every startup, but I think in our experience, Series A was a really important time to show that we're beyond, proof of concept years. We've got a product market fit. We're in 4 countries already, but now we want to be in double that, triple that, quadruple that. Across the whole continent and beyond into frontier markets, including the Middle East. So I think what may be challenging, I can't speak for investors again, since I'm not one, but as you grow bigger and as you scale, does that bring on more risk too? So I think as with any growing investment, the investors need to understand, well, okay, if you are growing and scaling, what are the additional risks that come with that?
What is the hardest thing to explain in terms of the really unlimited potential of your idea as a concept one, and on some level it doesn't appear proprietary, or is it?
Well, I think I don't want to dig too much into our business model. But yeah, I would just say that, from our perspective, scaling up means greater footprint. It means more staff. It means more liquidity because we're essentially an FX payments platform. It means more APIs, as we plug into more and more mobile money networks and bank networks across the continent. And as I said, beyond into other frontier markets. So I think the thing I would just focus on is that scale means more costs and something that we need to manage well. So, we should be achieving exponential growth from a less quickly growing cost basis and burn rate. But yeah, I think the other thing that we care a lot about is making sure that we're committed to building strong relationships with regulators, because I think certainly when you're in an industry where you're dealing with a relatively new, unknown technology, regulators will want to know, what are you doing with this technology? How can it benefit, our citizens? How can we make sure that our citizens aren't harmed, et cetera? So I think for us, a long-term investment is also made in making sure that we're highly compliant and working closely with regulators.
And so, yeah, the final thing is back to something I alluded to earlier. And Bitcoin's a problem, eh? I mean, there are a lot of things that tickle my social capitalist inclinations that make me want to, just hug the world, about Bitcoin. And then there's the whole world of people who backed Bitcoin for those reasons. And then there's a whole world of less idealistic people who see it really as a stepping stone to something greater. Like Bitcoin, I feel like needs to grow up for it to go mainstream. Or does it? You guys did the risky thing of aligning with Bitcoin by having part of Bitcoin in the name. I don't know if that's worked for you or if that's been a rub.
So let me be clear. We are actually digital currency agnostic. No, sure. The bit in our Bitpesa name stands for Bitcoin. But, if there were a more efficient digital currency with deep liquidity globally, we'd absolutely be open to that. And we'd be open to trading with other digital currencies, again, assuming they had the deep liquidity and other partners that can provide liquidity in FX markets where we don't operate, but want to trade with, or what our clients want to trade with. So yeah, from our perspective, I'd say we're definitely the latter. We're very pragmatic. I mean, we're very excited and about what Bitcoin as a proof of concept has shown. I'm not particularly a Bitcoin evangelist. I do go to Bitcoin meetups in London, and so I helped start the Bitcoin meetup in Kenya a few years ago when Bitpesa launched. But yeah, I'd say for me, I'm excited about the potential of distributed ledger technology, so both financial and non-financial. And then when it comes to cryptocurrency, I'm just excited about the potential for significantly lowering the cost of peer-to-peer, B2B, and everything in between payments. So yeah, I would say that it's not a big part of our mandate to really promote Bitcoin, as the end all be all. And like I said before, we merely use digital currency as a token of settlement, like a payment rail. So to settle with partners and like I said, in other markets where we're sending payments or receiving payments from. I guess the last thing I would say is that if Bitcoin or any other cryptocurrency wants to become mainstream, then it will need to be more stable, right? So if not to bring Zimbabwe into the picture, but that's the first market that came to mind. Like if I come into the grocery store that I mentioned earlier with my Bitcoin wallet, and 1 minute my carton of milk costs, half a Bitcoin, and then 5 minutes later it costs 1 Bitcoin. Well, you can pretty much guarantee that I'm not going to be too keen on paying for that milk carton with my Bitcoin. So I see the hype and the price increase, and it's exciting because it increases awareness. But I think,
and also because you're paid in Bitcoin. Oh.
I didn't say that I kept all my salary in Bitcoin, but yeah, basically to say that you can't have your cake and eat it too all the time. So, sure, Bitcoin could become more mainstream, but it's only going to become more mainstream if people find a practical use for it. So if that practical use for it is speculation, then that's going to lend to wanting Bitcoin to be more volatile for arbitrage opportunity. But if you're a player that wants to see it used as a global universal currency, like for example, today I got asked if I thought there should be a pan-African currency to make trade easier, then it's going to be more stable.
Okay, cool. And I'm sure you mentioned Zimbabwe because it's, to my mind, one of the potentially most viable use cases for Bitcoin adoption, right? As as alternative tender. Zimbabwe does present this interesting opportunity, many people think, and I'm almost convinced of its viability. Is that why you brought it up as an example, as the first example, or is it just random? You just went to Zimbabwe?
Well, I mentioned Zimbabwe because of the volatility of its currency and
the problems they've had in the past.
Right. Yeah, in the past, where, one might hypothetically have that issue with their currency, local currency. We're not in Zimbabwe yet, but although there are a couple other Bitcoin blockchain companies there, so, that maybe there is some potential.
Okay, well, thank you so much for chatting with me. And yeah, you took on most of what I asked, and I appreciate it, really.
Great. Thanks so much.